So why are protection products so important? How do they fit around a financial plan? But number one, what am I talking about when I mention protection products? So when I talk about protection products, I talk about the likes of life assurance, income protection, mortgage protection, specified illness cover, and even gone as far as talking about products like inheritance tax planning with a Section 72 whole life policy. Now don't worry, when it comes to a financial plan, we have three main areas we look at for our clients. We look to protect, grow, and replace their income. So let's look at protecting your income first of all. Your income is actually your biggest asset. Now what I want you to do is take out your mobile phone or a calculator. If you're watching this on a mobile phone, wait till you see the end of the video. So what you're going to do is get your calculator on your screen and you're going to get your calculator to zero, okay? Now what I'm going to do is pretend I'm 30 years of age, I wish, and pretend that I'm bringing in about €3,400 net per month. So I want you to do this yourself after this video. So what is your net monthly income? That's the amount of income you bring in after tax, so whatever hits your bank account. Obviously it's a weekly basis, just multiply by 4. So in this example I'm going to put in €3,200, okay? So it's €3,200 there. I'm going to multiply that by 12 and I'm going to see 38,400 a year. That's what's landing in my account on a yearly basis. Now, what I'm going to do is multiply this number by the years it's taken me to get to 65 years of age. So I'm pretending I'm 30, again I wish, but let's say I am 30, it's going to be 35 years. So I'm going to multiply this figure by 35 and I'm going to get 1.344 million. That's your biggest asset. So my ability as a 30-year-old to go out and earn an income between now and 65 years of age, 1.3 million is going to hit my bank account. That's without any increases in salary. That's without any promotions, any bonuses, 1.3 million. Now if in a relationship, I'm married or living with somebody and they're on roughly the same salary, that's 2.6 million. That's a lot of cash. It's going to hit your bank account between your lifetime of working. It's important you protect it and make sure that if you're out sick for a long period of time due to an accident or an illness, that some amount of that still comes in. That's why income protection is the most important product in my opinion and why it fits around financial planning so much. Okay, so after looking at income protection, we look at other products. So other products are going to be like life assurance contracts. Now, if you are living in Ireland and you have a mortgage, it's a legal obligation to have a mortgage protection policy. A mortgage protection policy is just a life assurance contract attached to your mortgage, okay? It's assigned to your mortgage. So let's say you have a couple and they have children and they have a mortgage for €300,000 outstanding with Bank of Ireland. You will have a mortgage protection policy for $300,000, meaning if one of you passes away before the mortgage is cleared, the life assurance company writes a cheque for that €300,000 and it goes directly to Bank of Ireland, leaving the surviving partner or spouse and children mortgage free. Complete no-brainer, premiums are cheap as chips, everybody needs one. Okay. Now, if you're in a situation where you don't have a mortgage and you're renting, guess what? You still need a mortgage protection policy. The reason being, although you haven't got a mortgage, you have a roof over your head, especially if you have kids. So in this situation, let's take it that you have no mortgage, okay, but your neighbour has got a mortgage. If you've no mortgage and you pass away, the rent needs to be paid the following month, the following month, the following month, putting probably financial pressure on the family because they're down one income. Again, very logical, just put a life insurance contract in place. If you're living in a €400,000 house, just get a life insurance contract for the two of you for €400,000. If somebody passes away, $400,000 is paid out to your spouse or your partner and they go buy a house. No rent, they're mortgage free. After mortgage protection, we talk about just plain old-fashioned life cover. Okay, so life cover does exactly what it says in the tin. If you die while the contract is in place, the life company pays out a lump sum. This is really important, usually if you have children and you have no other cover in place. So if you haven't got what's called debt and service in work, if you're not married as well in this country, so if you're married in this country and your spouse passes away, you get the state widow or widower's pension. If you're not married, you don't get that. So it's very important that you look at your situation on a case-by-case basis. That's why we developed a free protection consultation here at askpaul, because everyone's situation is different. So have a chat with us, book in for a free consultation. We can find out what your main situation is and see what level of cover you need. Is it income protection, mortgage protection? Is it life cover? Is it specified illness cover? That's why it's so important to look at this in an overall financial planning point of view. So obviously there's loads of more products out there in the marketplace I haven't got in this video. I'm going to be discussing them all in the coming weeks, so make sure you're following the page, your notifications are on, and you get the information you need.